Today we're going to be talking about Alibaba, and they're set to announce their earnings on August 15th. So we'll take a look at analyst expectations around this upcoming announcement, as well as where Alibaba's numbers have trended over the last couple of years. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before we jump into Alibaba's numbers, let's take a look at the stock chart. Year to date, the stock is actually up around 3.5%. It is down from its high of the year of around $88. However, it's still held up very nicely, especially in the last month or so, as a lot of other stocks have fallen. For example, if we look at the S&P 500, it's actually down around 3.37% in the last month. However, year to date, it's still outperforming Alibaba by quite a significant margin, as the S&P 500 has risen almost 13%. If you look at the NASDAQ or the QQQ, it's actually down around 8.5% in the last month. However, again, year to date, it is still outperforming Alibaba, up almost 11.5% this year. While the broader market has fallen, Alibaba has actually risen about 2.5%. And a lot of this has to do with the positioning of the stock. If we look at the last 5 years, Alibaba is down almost 52% from where it was trading in 2019. And if we go from its all-time highs of around $310 achieved in 2020, the stock has actually fallen over 75%. And really, the reason we don't see Alibaba dropping more when the broader market falls has to do with the fact that you really start to run out of sellers when you see this big of selling pressure against a stock. The people who are holding Alibaba are the people who are going to hold it long term, and we've really seen that since 2022. This stock is traded in a range anywhere from $100 all the way down to around $60 and has really started to level off very recently around this $75 mark. If you haven't been following Alibaba and you're wondering how the stock has fallen 75%, it boils down to three main things. The first being the fact that the Chinese government has gone after big tech companies in the country. We saw this really start a couple years ago, where they issued a number of fines against big tech companies in China to try and even out the playing field. And this had a negative effect on Alibaba's stock price because they were really fighting against their own government to try and stay competitive and continue to grow as a company. Another reason that Alibaba has fallen so much in the last few years has to do with the general economy in China. Ever since the start of the pandemic, there has been relative weakness in the country just around consumer spending, but also we have seen this develop into something much bigger, as there has been major concerns around their housing market. We have seen developers borrow money, and this cycle has really started to come to an end. The one positive in this is China does have room to actually lower their interest rates further. Unlike the US, China actually kept their interest rates high throughout the pandemic, so they have a little bit of room to kind of stimulate growth in the country. We just haven't seen them do this yet. And the final reason that Alibaba has dropped so much has to do with concerns around delisting. This came up a couple years ago and obviously had a big effect on Alibaba's stock price because there were concerns that the stock could be delisted from US markets. This came around the fact that Chinese companies were not allowing US auditors in to look at their books. This boiled down to the Chinese government having certain rules and regulations in place, and ultimately an agreement was reached and US auditors were allowed into the country to look at their books. However, there has still been a sentiment change in the market that Chinese companies run the risk of being delisted if the SEC does not like how China is approaching the market. So obviously a lot of these things are out of Alibaba's control. However, one thing they can focus on is the business and the metrics behind the business. And they're set to announce their earnings on August 15th, and analysts are expecting them to come through with an EPS of $2.09 and a revenue of $34.5 billion. On Yahoo Finance, they have 17 analysts covering the company, and they have an average EPS estimate of $2.10, so very similar to what we're seeing on Google. They also provide a low estimate of $1.64 and a high estimate of $2.38. Overall, all of these numbers are down year over year from $2.38. One thing you do have to keep in mind when you're looking at these analyst estimates is how often are they correct. If we look over the course of the last year, the last 3 quarters, analysts have actually been fairly spot on. 1.4% surprise, a minus 1.1% surprise, and then a minus 0.7% surprise. If we look a year ago, and this is something that we saw for about a year with Alibaba, is these analysts were off by a lot. A year ago, they were off by 19.6%. Analysts were expecting them to put up $1.99 cents of EPS when they actually came through with that $2.38 of EPS. So maybe we'll see that again this quarter, but right now, based off the current trend, it seems like analysts have a lot better idea of what's going on in China and what to expect from Alibaba. And this has even been reflected in some of their trends in EPS. Over the last few quarters, we have seen their EPS for the trailing 12 months drop from $7.13 all the way down to $4.33. This is GAAP EPS, so keep that in mind as we're looking at these numbers. However, prior to that, we were seeing a large uptick in their EPS numbers. They went from 92 cents in the trailing 12 months all the way up to that $7.13. And it looked like they were back on track to getting their EPS numbers consistent to where we saw them in 2019, 2020, and a little bit of 2021. However, that again has since reverted, and it seems like they're on the wrong track again. This probably has to do with the Chinese economy and the weakness we have seen there. However, it would be nice to see this going back in the right direction. One thing to keep in mind is that there does seem to be a little bit of a divergence here between their revenue numbers and their EPS numbers. Revenue is actually holding up relatively strong. We're not seeing a lot of variation in this from Alibaba. And on Yahoo Finance, there are 22 analysts covering the revenue, and they have an average revenue estimate of $34.34 billion, a low estimate of $32.65, and a high estimate of $35.05. And we could see Alibaba's revenue shown here over the last 5 years or so. Back in 2019, early 2020, they were bringing in around $70 to $72 billion of trailing 12-month revenue. That quickly grew up to $134.5 billion by 2022. So they saw a huge amount of growth over these couple of years in 2020 and 2021. However, since then, it has really leveled off a lot. They saw the revenue decline at max by around 8% in 2023. They saw it grow a little bit in 2023 as well. However, more recently, it's been basically level year over year. The fact that they've been able to hold up so well in terms of their revenue and really even potentially get back to growth on their top line leads me to believe that in the future, they'll be able to get back to higher EPS numbers. And I don't know if 2025 is going to be the year for that, but right now, analysts have an average EPS estimate of $8.31. This is non-GAAP EPS. Keep that in mind as we're talking about these. A year ago, they put up $8.58, so this would still be down year over year, but there is a high estimate of $9.45. That would be a solid increase year over year. It's really not till 2026 when analysts think that Alibaba is going to get back to profitability, or at least increased profitability. They are expecting a number of $9.41 in 2026. That's the average EPS estimate. The low is $7.41, and the high is $11.43. This high number, I think, would have to be everything going right. If we potentially see China lower their interest rates, this could stimulate a lot of businesses and really help Alibaba grow at a quicker pace. One thing Alibaba is doing a very good job of while the stock price is down is lowering their shares outstanding. They peaked around a 2.76 billion shares outstanding. That has since decreased all the way down to 2.54 billion shares outstanding. And over the course of the last year, we've seen them decrease their shares outstanding year over year by anywhere around 3% to even 4.8%. So overall, as Alibaba goes through this cycle of the stock being lower, they're still increasing your ownership in the company. My thesis for Alibaba comes around valuation. When I think about all these things that are going on right now with Alibaba, with China, I see them as being temporary. China will turn around their economy. I do think that they are going to pull back on some of the regulations against big tech companies like they have already started to do. And I also think that at some point in the future, investor sentiment in China will flip. We have seen it in the past where China has gone through periods like this. We saw it in 2018 specifically when the trade war was going on with China. And even after that, we saw Alibaba go up to $300 plus. And right now, with a valuation of 9.28 for a forward P ratio, that is extremely low. If Alibaba were to just trade in line with the broader market around a 20 to 25 forward P ratio, that would mean that the stock price would have to double. If it were to trade in line with a lot of US big tech companies, the stock would actually have to triple to a forward P ratio of a 30. So when I think about all these value creations, the things that Alibaba is doing in China, ultimately, I believe over time that we'll start to see these things change and Alibaba being valued correctly. But keep in mind, don't buy a company just because I talked about it here on YouTube. I've been holding the company for the last couple of years, and it's traded basically sideways. So if you are not a believer in the long-term vision of where Alibaba is going in the future, you would have easily sold by this point. We have seen companies like Nvidia go up over 1,000%, and it's easy to feel like you're missing out if you don't believe in the long term of where this company is headed. So make sure you are buying into companies that you believe in, that you've done research on, and not just buying them because I've talked about them here on the channel. So I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what happens when doctors get frustrated? Check the comments down below for the answer. Thanks for watching.